Hi, everybody. This is David Skarica, editor of addictedtoprofits.net. And this is another in our series of interviews with small cap companies. And we have a company that's pretty new. I invested actually in the pre-IPO last year. Red Metal Resources, RMES, on you're on.
Canadian Stock Exchange.
You're on that. Yeah, CSE. Just making sure.
Yeah.
And stock's about 25 cents, got a $12 million market cap. They're mainly focused in copper, and which is actually our copper deals have done a lot better for us in the last year than gold and precious metals. Although I think gold and precious metals are beginning to move higher and potentially break out here. But Ronnie, if you can tell us a bit about yourself, a bit about your projects, why you decided to start Red Metal, because like I said, it is a pretty new company. You've only, I think, been trading since about November or December, and tell us a bit about it.
Sure. So I'm VP Corporate Development for Red Metal Resources, and Red Metal Resources is a copper exploration company that has a property in Chile. It's not grassroots. We've already made a copper discovery through the drill bit. We don't yet have a resource estimate to demonstrate the size, but our focus really is taking the discovery that we already have and drilling off the full potential of the deposit. So my background is I was a mining analyst for Salmon Partners, an investment bank in Vancouver here in Canada. And I basically was a stock picker in the last bull market of from 2001 to 2011, basically. And then the bear market hit, and Salmon Partners doesn't exist, and a lot of the merchant banks that I was involved with subsequently are no longer there. That's what bear markets do, but we're in a new bull market for metals. So I kind of came back on the other side where I join companies that I see have good management and good properties and that have the home run potential that I look for, which was kind of what my focus was when I was an analyst. So Red Metal Resources checks all those boxes. Of course, management is everything. I think Warren Buffett said, you want management that are smart and capable, but you want them to be, honest and capable, but honest is everything, because if they're dishonest and capable, they'll all be blind. So I look for good management. And I've known Caitlin Jeff, who's the president and CEO. She's been with this property for over 10 years. I first met her and she was working on just putting a whole land package together. And so finally she's got all the land package together. It had historic drill hole results, so we already kind of knew there was a discovery. And then we just started drilling. So, I helped her raise money last year, and now the company has started to drill. And as you're seeing here, it has a very good market cap, 41 million shares outstanding. It's about 50 million now. And the share price is 25 cents Canadian since the last financing. So now what I see here for a home run potential is, one, the share structure is good. There's no 5-cent paper out there. Caitlin is a dedicated geologist. She has good pedigree. She comes from large companies, Placer Dome, Goldcorp, and she has a track record of success of making a discovery. This is already a discovery, and we're just expanding the mineralized resource. So now we're an active company, and I joined last year, did the initial financing, and then we're drilling now, and we want to continue to drill over the next 12 months. It'll be subject to a subsequent financing, hopefully at a higher price. And the idea is to drill off the full potential and ideally sell it to a major. If you go to, I should do a note on Chile right now, because there's been sort of rumblings in Chile. The government might be looking at nationalization, and it's all just posturing. Chile is one of the best jurisdictions in the world. Not too long ago, there were rumblings of changing the royalty in Chile, which was, they said, let's do 4% of gross sales, and it equated to 13% of net sales, and it got the industry up in arms. And the financiers were like, we can't finance like this. but the end result came out, it was a sliding scale royalty, which was reasonable and didn't really impact anybody. And now for the Chilean government to do anything in terms of even coming close to nationalization, they need 2 levels of government to approve it and the people to approve it. And there's just no way it's going to go through. It's just political bantering. Chile remains one of the best places in the world to explore for copper, and it supplies China all of its copper, most all of China's copper. So there's not a problem. We still love the jurisdiction. If you go to, I'll just do a little more on the property. If you go to slide 11, David, I'll show the potential, and this is the home run potential that I'm talking about. The one before that, sorry, the one before this one, two more, that one.
So this one, yeah.
No, 2 down, 1 more down.
Okay, the Farallon one?
There we go,
Okay,
that's the one. Okay, so if you look at the, this is our property concession boundary, it's the Farallon property. There's 1.5 kilometers strike length where the historic mineralization was, and we reconfirmed that mineralization through past drilling. We're drilling now to continue drilling along that 1.5 kilometer strike length. But if you look at it, there's a total of 4.5 kilometers within the concession boundary. If you look from the strike length of these shear zones from going from south to north or north to south sort of thing. But then in the northern end, they splay out. And those splays along the strike length sort of double the strike length of this copper mineralized potential. So those splays add another 4.5 kilometers. So within of strike length of this shear zone system. And what's good about a shear zone system is that you get the potential for large tonnage.
Okay.
So, you know, it's not like a vein system, whereas these shear zones go for kilometers on strike, kilometers at depth, and they average 10 meters in width. So it's big potential. And we think this mineralization will go to 500 meters depth. We tested it to 100. And even if half of all this 10 kilometers of strike length, 9 to 10 kilometers of strike length is mineralized, you're looking at a potentially big deposit, you know, 1.5 to 3 billion pounds of copper. And if you go to the next slide, you can see, sorry, one more down. It's the table of the drill hole results right here. So these are the confirmation holes of the historic holes. So these are 43101 compliant. And you have the core length, the copper grade, and the gold grade. Now, if you look at that core length, you get some areas of 32 meters of width of 1.35% copper. 1% copper is the holy grail. And then there's also gold of 1 gram per ton. So in total, what now the structures pinch and swell, so they can go as low as 2 meters and as high as 32 meters. But in general, we expect to average that they'll average 10 meters. So if you go 10 meter width by 500 meters depth by 10 kilometers in strike, the average grade on these ranges from 0.5 to 2% copper, but we expect it to average about 1% copper, and then the gold might average about 4 grams per ton. So we're looking at who knows, 1.5 to 3 billion pounds of copper, and if we drill off the full potential, the market typically gives 5 cents per pound of copper, but a takeover value is more like 10 cents per pound. So we're looking at a potential few $100 million market cap here.
And what's your timeline and budget for drilling?
Right. So what we're going to do is we will drill off a maiden resource, but it won't have any bearing on what the resource potential is. It's just to show that we have a mineable resource there. But then the future drill holes we're going to test the full 10 kilometers of strike length, including the splays. So we're going to raise a significant amount of money post drill these next drill holes that are going to expand the current mineralization along the full 1.5 kilometers of strike. But the subsequent raise, the money will be used for a maiden resource estimate and to test the remaining 9 kilometers. So over the next 12 months, if we continue to drill, we're hoping to show the potential for a lot of pounds or a lot of tonnage. And the benefit of this type of deposit is, unlike a porphyry project to develop it, yes, it's attractive to majors, but it costs $1 billion to bring into production. Now,
Yeah.
if we had this, we could actually start small scale production and scale it up. So we don't need to have like 500 million to $1 billion capex to start going into production. But that is something that we are willing and able to do, of course, if we still haven't got a bite from a major. But our main objective here, because shareholders make the most money in the least amount of time when a company drills up the full potential of the resource and then sells it to a major without even going into production.
Yeah, because I know that I've been involved with probably about half a dozen to a dozen companies that have been taken out. And some of them did have production, and the major wanted the production, but a few of them were just, and they weren't even along. Like there was one deal in particular I'm thinking about, Underworld Resources. They barely even traded for a year or two, and they did exactly what you said, and they ended up selling to Kinross. So like, yeah. So
and a lot of these get sold even before there's a resource estimate.
Yeah, because if you have enough good holes, and the major can come in and say, okay, yeah, there is a big enough resource for us to drill it up ourselves and put it into production.
Yeah,
it's going to cost us a lot less money to take you over now, say at a couple $100 million, than it will at a couple billion, in 5 years or something, or 3 years.
Yeah, and the majors only look at drill holes. They don't care what your resource estimate, and they don't care what your feasibility study says. They just look at the drill holes and the metallurgy and make a decision based on that. So, the timing is right, in addition to what we're doing now, because, metals have been in a bull market. Gold and copper has commenced a 5-year bull market. It's been 5 years as well. And usually what happens is there's an interim correction over an overall 10-year cycle. So metals tend to go into minimums of like 10-year cycles with a 5-year sort of mid-cycle correction. And we're pretty much done this. We're into 5 years of this new bull market. We're completed the mid-cycle correction, and we're ready now to take liftoff for another 5 years minimum of a bull market for commodities, both gold and copper, and we're in both gold and copper. But what could happen this cycle too, what's driving it is supply chain disruptions due to COVID, but even as COVID restrictions start to relax, in this case of copper, we're going deeper and deeper into the supply deficit for copper. There's just not enough copper there to supply, not only, switching over from gas to copper electric for transporting energy, but when you add the EV revolution on there, all the forecasts that the EV car manufacturers are making, is just impossible to supply them the copper. And that's the same for a lot of metals. And of course, gold as well benefits from this as well. So in terms of timing, the timing is pretty right, fairly well right as well, because we think both copper and gold, we see this mid-cycle correction. It's bottom. It's just sort of chopping along, but as soon as it reaches that, kind of breaches that last all-time high, then it's lift off again.
Yeah. I was just playing around with the charts just to show people. So yeah, like copper bottom, like you said, in 2015, 2016, and then you had this rally. And then, you kind of you fell off a cliff because of when everything shut down in March of 2020. But then you've come up high. And then since about the spring of 2021, you've consolidated. And it definitely looks like, and we're up 3% today. We're at about 460 today on the March contract. If you can break that 480 on copper, you can probably, there's no technical level because it's an all-time high. You could definitely go north of $5 to maybe $6. And like you said, with the EV demand thrown on to all the other factors of like the regular type demand and regular cyclical demand, that actually kind of makes it more sky's the limit. And by the way, we talked about this off air. My own personal opinion, it doesn't even matter if they can't meet like their production, like wanting 3/4 of cars be EVs in 10 years, even if it's just a quarter, that's a huge additional demand for copper,
Yeah, a lot of focus on the EV revolution has been on the battery metals, of course, but
Yep.
copper is a big factor in there. You cannot have a battery metals revolution without copper.
Yeah, without copper, cobalt actually
Yeah.
as well, So,
Yeah.
and actually, because I'm being mostly a mining guy, I kind of use that as a way to get people who say aren't mining people, who believe in green technology or the whatnot, into it. Cause I try to, tell them, look,
Yeah.
you can't have your electric vehicles without copper and, cobalt. I also tell them that's why it's not as green as you think, but.
Well, yeah, I mean, I think copper is the most green metal in the world because
yeah.
how do you switch over from fossil fuels without copper? And it also the platform for EV battery metals. So copper, it reduces the impact of the environment substantially over all other metal.
So yeah, I try to tell people that too.
Yeah.
I think that's one reason too, like with myself personally doing a lot of deals, 2 of my best performing deals in the last 12 to 18 months have been 2 copper deals, which one is up about 4x, the other one's about doubled. And the other one that doubled, I only did, in November, right? So, and I think that has played a part in it, that whole EV thing. But like you said, there's all these other factors as well, for copper to move higher. And there's a lot of production. It's not just supply chain. A lot of production has come off the market as well, in the copper market. And one thing you were talking about with Chile is, Chile is still friendly in terms of permitting, being able to get production. I think there's a base metal mine that's near a lake area in Minnesota, and the Department of Energy, Department of not energy, a department in the U.S. kind of kiboshed the whole thing recently, and it's like a huge property. So
but that was in an environmentally sensitive area, and we're not.
Yeah.
So Chile has one of the lowest tax regimes in the world. I do expect taxes to increase, but then it's still relatively better than most other countries in terms of taxes. But this political bantering doesn't, it doesn't impact the share price because the market knows it's a non-event.
Yeah, and I should point that out too, because I own a couple other companies in Chile, and I saw almost no impact on their. You guys were trading on the OTC before this deal closed, and you got the CSE listing, and there was like no impact on you guys whatsoever. Yeah.
And what's good about what I like about this deal too is that there's already a discovery made. So we're just expanding a resource. It's not like a punt where if we miss, you're done. This is like we have already identified mineralization, which we're just expanding. So you're just jumping on the growth of it. We know it's there.
And by the way, it should be noted, and we're going to kind of finish off on this note, that the other copper deal I had that was in Chile that did very well in about 2019, 2020, was the exact same thing. It was something that had a resource, actually even had past production. And that's the great thing, is that you already have something in place. You're not just doing like, wildcat drilling and trying to build something up from zero, And you guys only have, like I said, like a $12 million market cap. Like, that's virtually nothing, So
yeah, it's a good risk reward.
Yeah, for sure. And I should also know, because I've been watching, final thing I'll note here, because I've been watching, the deal trade, is that you guys also, I think the management owns roughly 46%. Of the shares outstanding. Yeah. But the other 50 is in strong hands, because when the 4-month hold came off the financing, like virtually no stock has hit the market.
There's only 6 million shares in the float.
Yeah. So what that means for people that don't understand that is, any little bit of good news, a little bit of buying that comes in, the stock could very easily move, So I just actually one question, how many warrants do you have outstanding?
There's about 10 million warrants, and they're all in the 20 to 30 cent range, and they have a scale up option too. So the warrants are all out of the money right now. It won't be an overhang at all.
Yeah. So, okay.
Yeah.
So, yeah. And I think the scale up goes to 75.
There's
again,
no cheap warrants or options. They're all priced higher than the current share price.
yeah, that's great, which is another factor,
Yeah.
So, his share structure can kill a lot of these deals.
Yeah.
And thanks for being on, and we'll do a follow up in a few months, hopefully after you
And
got
we have
some
drill results.
drills. Yeah, that's exactly what I was going to say. So, yeah, so if anyone is interested, like I said, I've had two. This is talking to my subscribers. We've had two deals, which I'm going to talk about, in another video. They've done really well in copper, so hopefully this can be our next one. And they were similar to you guys in that, not so much being in Chile, but just like the share structure. I also too, when you're talking about the next cycle higher, I like new deals because you don't have that overhang. You don't have, oh, this guy owned a stock since the dollar, it went down to 20 in the correction, 20 cents. And now there's a whole bunch of people at $1 waiting to get out. Like you guys, anyone who's in is basically in flat or at a slightly lower level.
Yeah, I mean, we did a rollback, so it's a brand new company, pretty much. Yeah,
pretty much.
Like you're
Okay,
saying.
thanks, Rodney, for being here. And like I said, we will talk in a few months.
My pleasure.
Thanks.